marquee sessions, actually a marquee session, closing the fourth annual, the fourth Africa Bank 4.0 Summit, East Africa. And unfortunately, due to an emergency, Noha Shakar, she won't be moderating this panel. In fact, I would like to call from yesterday the keynote speaker of the conference, that was Mr. Ali Hussein Kassim, the chairman of the Association of Fintechs in Kenya. Ali Hussein will be moderating the Fintech panel. Thank you very much, Ali, for taking up this this last-minute opportunity.
You're welcome.
On Nova's behalf, to take the role of being the moderator for the Fintech panel, which is all about what is the future of Fintech innovation in East Africa. And right now on in the Zoom room, I have with me Simon Hardie from the UK, the CEO for Findexable. Hi again, Simon. It's a pleasure to see you once again at the Africa Bank 4.0 Summit.
Hey,
thank you, Simon. From Sudan, we have Manal Yassin. Manal Yassin is the general manager, and she's also an independent fintech consultant. She's the general manager for Shomoul, which is the Sudan Fintech Association. From Pesabase, we have Mrs. Roselyne Wanjiru, the director of growth and user acquisition. Hi, Roselyne. And from Farmcrowdy, we have Mrs. Fionah Umulisa, the country manager for Farmcrowdy in Rwanda. Fionah, if you may please turn on your camera, that'll be great. So thank you very much, Fionah. Thank you very much for the panel. We are waiting for Daniel Kimoto to join, but I'm sure he will be joining us soon. He's got some technical issues. Well, digital and technical issues are kind of relate nowadays. But anyways, no, we'll see him soon. But overall, I mean, like, I'll ask Ali Hussein to take forward the discussions of this panel discussion. And yeah, over to you, Ali. You may unmute yourself. Over to you.
Thank you, Fahad. It's great to be back once again, and thank you for doing part of my job, introducing the panelists. I can see familiar faces. Simon, hi, Simon. We have sort of communicated and
speak like once a week at the moment.
I'm back. Yes, I can also see Fionah. I think Fionah, we've interacted a bit. I am looking forward to engaging with the rest of you. So without further ado, let me just kick off with just, a little bit of introduction. And this is really about, what do you see? We are already into the 8th month. I mean, August is just 2-3 days ago, 8th month. So what are the predictions for and trends for fintech for the rest of the year and and beyond? And what are the current challenges, and what do we see as opportunities for Eastern Africa? So I'll kick off with probably a 1.5 to 2 minute introduction on the subject from each one of you. Let me kick off with my sister from Sudan, Manal. Manal, over to you. Your introductory statement, 2 minutes, and then we move to Roselyne, then Fionah and Simon. I'm hoping that the last panelist will come in, but if he doesn't, I'm sure we will cover for him. Manal, over to you.
Thank you, Ali. Hi, everyone. It is a pleasure to be here today. Well, I think 2021. What is happening is 2021 is the outcome of the pandemic year 2020, and I would refer to Sudan market particularly because it has two impacts: impact of pandemic, and the other impact that we are reintegrated with the international economy again. So I think there are a lot of dynamics in regards to payments and fintech in Sudan. And even in the region, we are expecting more development in the regulation side. And even for fintechs themselves, they are start thinking and to diversify their products and services beyond typical payment business. So a lot to come. Thank you.
Thank you, Manal. I'll come back to that on Sudan. I have personal experiences on the movement of money between Kenya and Sudan. So we'll discuss that a little bit more. Roselyne, over to you.
Thank you so much for this opportunity. I'm excited to speak from Kenya, which is a mobile champion and happily known that way because apart from the statistics we've already seen in more people going cashless and more people embracing different workarounds to that, it's that the common mwananchi, or as we say in local context and language, is that the mama mboga, the local kiosk owner, the informal economy, more people are aware of what fintech is and the power of what it can do. Now, I'll point out, for instance, one use case whereby a young person who is yet to clear college or their studies in campus realizes a business opportunity and decides to open up a shop on Instagram. So we're seeing that they can, they can start to advertise maybe their products, or even if it's posting without boosting their post or paying for ads, and they're able to get at least 1, 2, 3, 4, 5 clients this way. It might be a slow build, but these are the these are the faces, these are the names of people that we are seeing today who are investing fintech as they're looking at ways of earning income in the micro context, and not just the macro context, which is traditionally speaking, getting a job, right? So fintech is vibrant as at now, and the services are only going to diversify, because the more people are aware, the more they can demand for that. And the more they demand for that, then the more service providers have to make their products as seamless as possible, so that beyond M-Pesa, then we are seeing different services filling different gaps in the counties and for different age groups of people. So we definitely are at a very interesting point in the adoption of fintech in Kenya. Thank you.
Roselyne, thank you so much for your introduction. Fionah, over to you.
Yes, Ali, can you hear me?
Clearly.
Awesome. I think with COVID, it has really proven to us that digital platforms and technologies is the way forward. And I think there are a lot of opportunities in terms of payments and remittances, but I personally am very touched to financial lending, given to the number of SMEs we have in the economy and in the ecosystem. And I believe fintech would serve a great job serving SMEs with the opportunity that it holds. Of course, partnering with banks and other key players, and opportunities are also in their data. I believe if fintech wouldn't do it by themselves if there's no open data, so that we understand the consumer, both from financial discipline, but also behavior part of a human. So yeah, I'm glad to be here and excited to talk much about fintech and the future of it.
Fionah, thank you so much for that introductory. Simon, over to you. And Simon, you've done, Findexable has done a fantastic report on ramps and roadblocks. Maybe, I don't know whether you presented it earlier, but it would be good to just, when you're doing your introduction, to probably give us a snippet of that report, because it sort of looks at very interesting components of the fintech ecosystem across Africa. Over to you, Simon. Simon, you're on mute. As I always like to say, it does help if you unmute.
Wow, it's like hundreds online events in a year, and I'm still doing that. Thanks, Ali, for the introduction. And absolutely, yeah, it's a good call on the report that we've done. I was going to talk you through a little bit of some of the sort of findings from the Kenyan portion of that data. So Findexable has created, as Ali mentioned, we launched a research piece in conjunction with the UK Department for Trade about a year ago, we looked at 4 key markets, key fintech markets in Africa, Nigeria, South Africa, Kenya, and Ghana, and we did some cross-market comparison. And I think what's come out of that from at the kind of level of East Africa, particularly centered obviously on Kenya, is really just quite how mature the Kenyan marketplace is. And in fact, when you look through, when we look through the responses to, really what you're seeing, the kind of primary takeaway from that is really just gives you a very clear picture that Kenya is quite a different place at the level of the maturity of the fintech ecosystem than other markets, and in some cases it outperforms, one would assume would be a kind of a natural leader as a large sort of fairly established relatively mature economy. Now, for many of us in fintech, of course, we probably would have guessed that anyway. But I think, just to talk through, a couple of the highlights from the data itself. One thing that sort of jumped out at me really was, we looked at, we asked all the companies in the survey how much they'd raised and what they'd raised and at what stage they were at. 3/4 of early stage firms in Kenya have raised money. That's early stage. That's looking at investments below $5 million. And in terms of the amounts raised, Kenyan firms are raising something like, based on the survey data, average 2 times more than counterparts in South Africa, and nearly 4 times more than peers in Nigeria. So there's something very interesting happening there. A couple of other things I don't want to dominate this conversation, but a couple of other interesting things that came out is that the establishment of fintech, a much greater number of fintechs in the Kenyan portion. There's more of a heritage to the fintech landscape as a whole. Something like just under half of fintech firms were established in the last 5 years, compared to nearly two-thirds of firms in Ghana. And then finally, just to say that there's one other quote that I sort of thought was sort of valid for the conversation today, is just how aggressive sounds an ugly word, but certainly how ambitious fintech firms in Kenya are, as seen in the study. A large number of them, greater than the other 3 markets, we're really looking now at international expansion for a variety of reasons, and what one can tell from the data. I mean, there's certain indication that small market size is a limiter on growth. That was something that was expressed across all the markets that we studied. But in terms of those companies that are looking to expand into other regions, Kenya was an outlier there. And interestingly, as you might expect, quite a number of them were but still nearly a third of the firms in the survey that we polled were looking at and certainly for us, I think it's telling us about Kenya, and it's sort of, it really is becoming quite a different place at the level of fintech development to the rest of Africa.
Simon, thank you so much. I just want to check with everyone. Was it just me, or Simon was hanging a bit, or was it on my side?
I think it might be me.
No, he was hanging a bit.
And I had some dogs on the in the background, so I'm hoping they're not the ones chewing your wires, Simon. No, no worries.
It's a neighbor's dog. I'm going to shut the window.
All right. So, Simon, thank you so much for that introduction. I thought that report that you did, Ramps and Roadblocks, was quite an important conversation to have. Let me get back to my other panelists. Let's go back to Manal. I know, Manal, you started talking about the pandemic, but you've also alluded to the fact that Sudan is just now coming back into the global financial ecosystem. I recall a few years back, my daughter went to school in Sudan. She finished last year. She did her medical degree in Khartoum International University. And I remember how initially how difficult it was sending money because you couldn't do it in the normal way. So we finally had to find somebody in Kenya who is connected to somebody in Sudan, and we had to send money that way. It was efficient, but the scalability conversation around that is a different conversation. How has the pandemic sort of changed the landscape? How do you see that moving? And how do you see your members of the FinTech Association in Sudan interacting with what we call the incumbents, the banks and other financial institutions? How do you see that panning out up to now and in the future? Over to you, Manal.
Thank you. And the story you told about sending money to your daughter here in Sudan is a typical way for sending money internationally over past years. Unfortunately, it was impossible to send money directly from a bank outside Sudan to a bank inside Sudan for a number of reasons, because of the sanctions, economic sanctions on Sudan, because of the big difference between the formal exchange rate and the parallel market exchange rate. It was a huge. So I would see that the impact of the economic and political situation in Sudan is major than the pandemic impact. It might be surprising for people, but honestly, currently the country is going under tough rearrangement and a lot of economic reforms. One of them is semi-unification of the exchange rate. That led to, again, people can send money through banks, through Western Union. Yes, we have other international money exchange companies in Sudan as well, and you will receive it at a fair rate between the parallel market and formal rate. So that is a good development, will attract the money to the formal ecosystem. Regarding fintech, most fintechs in the past were focusing on payment, providing payment solution. Basically, still the inclusion, financial inclusion ratio in Sudan is too low, around 15% of the population. But over recent years, we noticed a phenomenon that one of the biggest banks in the country introduced mobile application. And now people use the name of that brand as a mirror for money sending. If you go to a market or to grocery anywhere.
So it has become a verb, like M-Pesa has become a verb in Kenya.
Not to that level, but at the country level, it found good acceptance. Now people say, do you want to pay using cash or using that app? Not to say using cash or paying by bank card. This is good sign that people are accepting formal solutions. Again, back to fintech. Fintech start to think about providing other services than just like payment at point of sales or purchasing electricity or airtime or paying phone bill. Those are the common services currently available using bank account. So they are start thinking, why not to provide saving? We have informal saving services. We have informal money transfer services. Why not to formalize them through fintech? Even the regulator now is listening to such innovations and such ideas to see how it can create the necessary enabling environment for it. Before, banks considered fintechs are competitors. Right now, they are seeing them as a complementary parties for them. The fintech can reach segments, areas that is difficult for banks. They can deal with a small amount that is not of favor for banks. But at the end of the day, it is intermediary to send that money to the bank. So we are seeing good development in the market. Yes, we are at the beginning, but it is a good signs for good development.
Manal, thank you so much for that. Roselyne, over to you, based in Kenya. The same question, but with a bit of nuance. Kenya is quite interesting, and Simon of Findexable has alluded to that also. But let me just give you a scenario. What is currently happening today? You have quite a number of banks that already have open API platforms. You know, KCB, the Cooperative Bank, Equity Bank, Diamond Trust, and a number of others are coming into play. Let's not even start talking about the M-Pesa Daraja API platform, which has been in existence for quite a number of years. I think 2016, if I'm not wrong, 2015, 2016, or probably even slightly earlier. How are you seeing this interaction between the bank open API platforms and fintechs like your organization Pesabase, especially the fact that you say you are a blockchain-based platform? How is that interaction? How easy from a user experience perspective, from a developer side, and also from an end user perspective? And maybe nuance that a bit with embedded finance. How is that moving towards embedded finance? Roselyne, how about you?
All right, thank you. For perspective, just for the audience who might be hearing about Pesabase for the first time, Pesabase has been, initially targeted to serve the Australia to East Africa corridor, that is Kenya, Uganda, and South Sudan for starters, because as any fintech that will begin to serve its initial target market, then there's that aspect of zeroing in, right? So again, for blockchain, those who might be hearing about blockchain for the first time, by a simple definition, then a blockchain is a distributed ledger, or at the simplest possible definition, it's a list, right? But this list has a history of transactions which are linked in a way that you cannot tamper the current record without interfering with the previous records. So that's one of the things that makes blockchain technology stand out as an alternative toward especially data integrity and tracking and things to do with provenance, okay? So Pesabase being built on blockchain means that the financial database or the history of transactions then is stored on the Celu blockchain. Now, this in the back end, allow me to begin by speaking about it from a developer perspective. It was not hard to build the integrations, and taking up the APIs, the team didn't take even 2 months to just get around building both the solution and getting up the technical infrastructure. However, in terms of crossing over to the end user, to the customer does not see too many bits of information that they have to deal with. One of the greatest criticisms against blockchain technology in terms of adoption has been that the user experience is tends to be difficult, tends to be complex, and tends to be wrapped in terminologies that most people are just not comfortable with. However, like for Pesabase, the application itself is built in a very simple and straightforward way that you just have the functionalities of sending funds, requesting funds. You can see your wallet balance. you can withdraw funds, you can, upload funds to the wallet and basically transact like, as it would within less than 2 minutes. And even for the user experience, the application itself takes only 20 seconds, right? So that's a win for considering the payments landscape, whereby you're looking at high volumes of transactions going on, and people just looking to make their everyday transactions as easily as it would be. So for Pesabase, I can confidently say that the problem of user experience has been solved, and we keep improving definitely as we listen to our customers and get to hear what they really need. Now, Pesabase itself is also built in two ways. First of all, it's a peer-to-peer aspect. Then there's a business-to-customer aspect, whereby agents who are on the ground are also going to help people who don't have the mobile application to be able to send money just as they would, they would use a typical agent with any other banking service. Now, the agency model is meant and built actually to serve those customers who do not have access to internet or who do not have a smartphone. One other critique against blockchain technology has been that it's built heavily on, internet-related protocols and, desktop-based applications, which again tend to lock out so many people who do not have, first of all, access to a laptop, and let alone a laptop because they can't afford one. They don't even have that basic access to internet. So you still have that debate or concerns around financial inclusion, if at all. The vision of what this technology was meant to serve is to be indeed realized by millions of people. So back to Pesabase, it's that behind the scenes, the technology problem has been solved, that we are able to integrate the APIs so that people can facilitate the transactions without having to know what's going on behind the scenes. And for the customers, it's that they can, just basically move their money and remit their funds without worrying about what's happening. So in that regard, then where do we stand with embedded services? It's that allow me to put it in a story, right? So in this story, it's that let's say my name is Jane, and
so Roselyne, I would love for you to wrap it up now so that we can move to the other. So maybe 1 or 2 more minutes, and then we move to the other. Thank you.
Okay, that's fine. So allow me just to put it in a bit of a story. So my name is Jane, right? And I don't, as of yet, let's say I am 19 and I live with my parents. 19 is the median age of pretty much Kenya and Africa. So as a 19-year-old who's looking to get opportunities, get income, start out life, and maybe go to campus if I do not necessarily get the income opportunities I need. One of the things that I do need definitely is a wallet whereby either my parents can send me money or my friends can pay through my businesses, as I was alluding to earlier. So in terms of embedded services, I would encourage or just put it across to not just the panel, but to innovators and entrepreneurs. Don't just put a blanket, a blanket statement out there that, we're looking for users, we're looking for customers. Put a name and put a face to this person who may not have certain aspects of identity settled, may not have certain aspects of technical, applications in place, and may not have certain accesses that, are privy to people who may be, in the working world and all that. So as you think of this 19-year-old who is literally at the median age of Africa, build for her community, build for her friends.
I love the fact that you brought in the issue of Gen Zs. And these are people and users who are natives to the internet, as opposed to some of us old geezers who are immigrants into the internet. Fionah, over to you. From a Rwandese perspective, looking at Rwanda and moving out of Rwanda and into the into the other East African countries, how do you see this playing out and panning out going forward? Pandemic, fintechs on one side, banks on the other. How is the relationship panning out? Are they still looking at each other as enemies, or are they looking at each other as frenemies? You've heard that term, frenemy, right? Friend and enemy at the same time. Over to you, Fionah.
Yeah, sure. Thank you. I think the big word here is partnership. We want it or we don't want it. I think partnership we come through, and we better embrace it as early as possible. And we need to have a mindset that we are not here to fight for a customer, rather we are here to fight cash. I think we need also to commend some banks are opening up. We shouldn't always put every bank in the same, in the same basket. Some banks are really doing their best to understand, the fintech space and how they can do what they have to do, which is scale, and they allow fintech players to contribute with their agility. But we still have a long way to go. Look at Rwanda or East Africa in general. There's a big opportunity for financial lending. When it comes to financial lending, there's a part of fintech which is providing a seamless technology, but banks are very much familiar and their expertise in providing capital, So, myself, I work in an agriculture ecosystem, and there's plenty of opportunity for SMEs and agriculture smallholder farmers. Sub-Saharan Africa, we are a home to about 50 million farmers, and 90% of the economies, the SMEs that do something that is related to food value chain, So I think we need to open up and we need to collaborate. And so when we say collaborate, what does it mean? We mean we need data. We need to leverage on the data the banks already have, telecoms already have, and some big fintech players that are already on the market. I believe in 5 years down the road, we should not allow a customer to have more than one app on their smartphone. I think by data, one person does download an app once a year. So I think the future should be opening up the data and allowing the collaboration to have super apps, and why does, like, for example, Europe or US have embracing super apps, or countries like Indonesia with Gojek? It's because there's already, fintechs are already partnering. So if you're providing ride hailing and you're providing lending and you're providing other fintech services, let's all of us come on the same platform, so that when a consumer is looking for whatever they're looking for, they can find the same the service in the same platter, And I think yesterday or some time back, Ali, you spoke about the buy now, pay later model. We want it or we don't want it. Africa, we have to embrace it. I think with even outside technology, in culture-wise, let me speak from Rwandan perspective, we sometimes buy things and we pay them later. We're already doing that, So technology is just here to make sure if you're already a consumer or a shop of that shopkeeper, why can't we keep the data so that we use it for next time? If you're looking for a loan, for example, if you're looking for a mortgage, something like that. So I think fintech and banks and regulators and telecom, there's a room to do more, to open data to everyone, so that we serve each other and we fight cash. If not that, and we keep fighting customer, then we shall always lag behind to the global technology development of the world. So yeah, that's what I think. And I think that we're doing a great job, but we still need to pull up our socks in terms of collaboration. And there's another thing I want to mention. We always say technology is always ahead of regulators. I think that's one of the main things everyone kept on saying, technology is always ahead of regulators. Then what? We already know. So if we know that we shouldn't lag behind technology, then it's a high time that we say, okay, we need now to be ahead. We need to be ahead of technology, or we need to come together and collaborate, And we always have a tendency of wanting to see proven concepts in West. And as soon as they are proven, then we can now start thinking about them as African continent. So why can't we do it as early as possible, that when entrepreneurs are bringing these concepts on the market, they find us ready. So yeah.
Fionah, thank you so much. Really appreciate your questions and your responses on that. And I think that issue of the super app is an interesting one. I wish we had more time, Fahad, to tackle some of these things. Simon, from your perspective, looking inside into East Africa, answering the question that I talked about, the connections between fintechs and banks, how has the pandemic assisted in accelerating the partnerships, or has the pandemic made it even worse in terms of the engagement between fintechs and other financial services organizations? Simon?
Yeah, thanks for that question, Ali. Yeah, it's a timely one, isn't it? So as a backdrop, amongst the other things that we've been doing over the last month ago, basically the work of a year's worth of work to rank ecosystems globally, and we delayed it. Actually, we were supposed to have launched the rankings at the beginning of the year, but because of everything that was going on, we pushed it back. The fascinating thing that's come out of those rankings is that we've now added 50 cities to the number of fintech. And so,
Simon, Simon, maybe if you could disable your video, maybe your reception will be better, because you're really breaking.
Yes, I'll take the video off.
Disable your
or
video.
Maybe one or two of the other speakers could do the same, maybe, because I think it's the video that's the issue. But I'll turn mine off.
Okay, so guys, maybe disable the videos until you are speaking, so that we can have a better reception. Thanks, Simon, for that suggestion. Please proceed.
Yeah, that's good. No, and if we think back to the beginning of last year, where of course suddenly the whole world went into lockdown, what transpired in the end being done, where 2020 was actually the third highest year on record for venture capital funding into the sector. And of those 50 new cities that were added, at the country level, 19 of the 20 new countries that were added were in emerging markets. So I think really you can only draw one conclusion, which is, and that's certainly the conclusion that we're now drawing, which is that fintech is here to stay, and that the pandemic has actually proven that fintech is of systemic importance, and it cannot be discounted. Now, I just wanted to sort of reflect on what Manal and Fionah were talking about, which is that one has to get away from a world of thinking about the them and us, the fintech versus bank. Those of us that are old enough to remember the wallet war leading the way, in other markets, particularly Western Europe, to a limited degree in North America, the conversation between payment startups, or payment technology companies, as they then were, was all about how do we work with the pay tech companies, because it was always, and the customer, both sides felt that they had to own the customer. And of course, as we've seen over the last 18 months, is that a world like that does not work. It certainly cannot work, and it cannot serve us. Over the last decade, have had a very bad rap. Lots of organizations, lots of fintechs are constantly going to move. That is the same in some cases, but it's certainly not the case in all cases. And I think at the level of the ecosystem now, this really is a world where we have to think collaboratively, and the ecosystems that will do well, and therefore the companies within those ecosystems that will thrive, are where there's a culture of collaboration, where there is an internal mechanism within that city or that country to enable and ideally almost enforce in a subtle way collaboration between the different parts of the marketplace. Now, just a final point on this, which sort of bleeds again into what a couple of the panelists were talking about, this around super apps, and also what I think that there's a question posed about learning from China's digital and fintech innovation, which is that super apps are an important play for emerging. They don't just enable convenience and ease for the customer, but they also advantage of the fact that at the level of the infrequently by
Simon, we can hardly hear you. Your network, for some reason, is still not.
Is it better? Is that better now?
Yeah, it's better now. But I think I would like you to wrap it up now in about a minute, so that we can move to the next. Yeah.
Absolutely. So I just want to say, just at the level of the super app, I think the big competition now is not necessarily going to be for banks. The big competition is not necessarily going to be the fintech companies. For the fintech market participants that are going to be the big opportunity. And yes, one can look at China, but actually the exciting things that are happening on the super app front are in other places, South America, Central Asia. There are companies which are seeing that they have a customer base engine to turn that customer base into an ecosystem play, and potentially further down the line into services provider. So I think that's interesting. Some really interesting opportunities for African fintech companies.
Thank you, Simon. Much appreciated. So going back, we have some questions from our audiences. So I'm going to ask my panelists to just enable their videos. I'm throwing this question to each one of you. You can respond if you feel you want to respond to that. So first, the issue of learning from China's digital and fintech innovation. I think China can learn from us too. The M-Pesa conversation and the open APIs that a lot of the financial services sector has really implemented, especially in Kenya, has really sort of created a fast-forward proposition for fintech to really grow. But I think there are certain components of the Chinese ecosystem that we could learn from, especially from a user experience perspective when it comes to payments. I think one of the things that we sometimes do forget is that despite M-Pesa's success, and M-Pesa being sort of the new rails of the financial services sector, 85% of transactions in Kenya are still in cash. So that's a huge opportunity. And I think there's friction around the payment ecosystem that is actually causing this. So what are your thoughts, guys? What are your thoughts? What can we learn from China on their digital and fintech innovation ecosystem? And I'm opening this up to anyone in the panel. Who wants to go first?
Thank you. I can share thought.
Roselyne?
I'll just keep it.
All right.
Yes.
Yeah, please keep it brief, because I think we have only 15 more minutes.
Yeah.
Maximum.
So I'll keep it brief. So in two things, I'll highlight a documentary I recommend the audience to watch. It's called New Wealth Creation, the greatest wealth creation events in history. And it just highlights some of the key points that have come up within the Chinese economy in terms of people adopting mobile payments. Because in the documentary, you can see someone just going to the marketplace, and whereas you would just see a blue and a green like QR code whereby someone just scans and pays for their vegetables and any other groceries that they bought. So from this particular documentary, I just picked that user experience and safety cannot be compromised upon. One of the reasons, for instance, in the pandemic that a lot of small-scale traders refused to use M-Pesa was that other people that were making payments would reverse them. So Safaricom actually had to work on that to make sure that someone is not scanned at the point that they've sold their goods and someone has reversed the payment. So it's a double loss for them. So in terms of user experience, that definitely makes it a painful incentive to reject digital payments. So user experience and safety, because if I'm afraid of, for instance, being hacked or my phone number being, connected to some crime syndicate and things like that. And, misinformation travels as fast, faster than good news. So unfortunately, it still has to come back to user experience being seamless, that I feel safe using these platforms. And I'm not afraid that someone will call me on a fake number and make me leak my PIN details and my security information. Thank you.
Thank
Yeah,
you, Roselyne, for that.
I would go next.
Fionah, you want to answer that question? Please go ahead. Keep it brief.
Sure. I think we can learn 3 things from China specifically. One is the regulatory landscape. Second is education. And third is a single market. So when it comes to regulatory, back in China, the regulators are always working hand in hand with banks, telecoms, and fintech players, because first of all, they believe that they're here
Fionah,
to protect. Yes, can you?
I'm sorry. I'm sorry to interrupt you on that. I think from a regulatory perspective, we need to learn not to do what China is doing. Wouldn't you guys agree with me? I mean, look at what has happened in the last couple of months. Look at what has happened to Alipay and Alibaba and other technology companies. I think that is one super interesting lesson that African regulators and policymakers can learn to unlearn. I'm sorry to disagree with you on that one. Please proceed.
Yeah, sure. Thank you, Ali, for your inputs. And second, for me, I think it's education. Sometimes we pop out different platforms to consumers, but we lack to teach them or to educate them on how to use it effectively. And looking at how much funding has come into African ecosystem, I think it was just about 2.1 funding went to the financial education. So to me, it's if we keep giving fintech different financial products to farmers or to consumers in general, but they don't know how to utilize them. They don't know after using that platform where to go to ask for the service that they deserve. So I think we should just have, we end up serving the same segment, which is the already banked segment. And the third is the single market. And why am I saying single markets? Because when we talk about opening APIs to different stakeholders, and currently, I think, if I'm not wrong, we lack fintech association at continental level. Yes, we have different associations at national levels, but these key players, fintech players, we need to come under the same roof and come up with different standards that we think that would work for the market 10 years from now. And to do that, we need to first have to sit on the same table and agree these are the standards that we can work on with regulators and with consumers. And then we can start speaking about opening data. But we're not going to open the data if there's no such conversation between different fintech players in the ecosystem and at a continental level.
Fionah, thank you so much for that. Manal, is there anything you want to add on that? Simon, you want to say something?
Yeah,
do you want to say something,
just,
Simon?
Yeah, I would just going to reiterate a little bit what Fionah was talking about there, which is, I don't know if you can hear me, I'll turn the video off again. I mean, absolutely, you know, I'll take your point about regulation. You know, it's really got to be about objectives. What is the objective of what do you want to, what does a country or a nation state want to achieve with its fintech strategy? And I think that's really what it's got to be built from, because otherwise you do end up with this situation where short-term regulation means that short-term decisions or quick turnaround decisions then have to be made further down the line. And in the case of China, well, it's a monolithic country, and regulatory winds do change. But if you're really about saying that fintech is about two things: driving entrepreneurship and creating successful companies, one, and secondly about driving access, you know, at an affordable level to as many people as possible, then what you've got to do is line up the ecosystem, the conversations with the existing institutions, the conversations with entrepreneurs, and the regulators behind that to make that viable. Yes, certainly the super app phenomenon is relevant and it's important, but ultimately it's got to be about what are you trying to achieve with your with the fintech ecosystem that you have, and thinking about how you might create an enabling environment to best effect.
So Simon, thank you so much for that. I think this China question is a very interesting one. Let me just add 1 or 2 points before we move to the next question from the audience. I think one of the key things for fintechs and other tech startups is that we have to appreciate the fact that today, in today's world, regulation policy is a given. So let's just get on to the program. Let us not fight something that we can't win. And the way we do this is joining together, join associations, join bodies like the Association of Fintechs in Kenya, like the Domain Digital Lenders Association of Kenya, so that you have a collective. When you are one together, many, it becomes a lot easier to engage from a policy and regulatory perspective. Guys, there's another question, and I know we are running out of time, so I'm gonna do the last question because we are supposed to end at 5:40. There's a question from the audience around KYC and requirements for banks in getting loans against fintechs. I'm not sure I understood that question, but maybe the questioner was asking why are there stringent KYCs and how can banks and fintechs collaborate? So before I ask my panelists, and when I come to you guys, respond, and let's have your closing remarks, because Fahad is urging me to close it down at 5:40. KYC and fintechs and banks. I think one of the most important things for all of us to understand is that KYC is important. It's for protecting us, it's for protecting the ecosystem, it's for protecting the banks and the fintechs. And it's also around, speaks to anti-money laundering conversations. So this is not something that we can escape. But let's also appreciate and understand that the ecosystem that is in play now with the telcos has made KYC very easy. And that is why in Kenya, the mobile lending industry has ballooned and blossomed to kingdom come. It has its plus, it has its minuses, but the reason why, one of the key reasons is because that KYC and that credit modeling has been made super easy because of data. We haven't even started touching about the importance of data. I know Roselyne talked a little bit about it. So guys, as you're responding to the KYC question, let's also have your closing remarks. And I would ask my sister from Sudan, Manal, to go first. let's keep it to a minute. Over to you, Manal.
Thanks. Regarding KYC, well, in the case of fintech, KYC might be less than that required by banks. Banks have a lot of requirements have to fulfill for even in their core business to work with other international institutions and counterpart banks. But in case of fintech, usually fintech size is small. They might focus on a specific community or territory. So even the amount of money that run in their businesses is much less than that run in services provided by banks. So fintech can provide less required KYC as just an example of the savings service or crowdfunding or lending. They might provide those services for community, and instead of asking for building or land as a collateral in case of the bank, they can ask for the village imam grantee. So they can provide the lending to a group of people, and the village imam will be in as their collateral, because at that community, everyone knows others. So there is a trust. This is one thing. The other thing is, and this has been brought up by a regulator, when looking at a partnership between a bank and a fintech, there is risk sharing. The fintech takes the operational risk from the bank because it deals directly with the individuals, while the bank bears the risk of money management and compliance, and they are experienced in this. So yes, KYC in case of fintech should be less than the requirement of the case of bank. As final remarks or closing remarks, the market or the global market right now after the pandemic has opened up new opportunities. For example, people realize after millions have lost their jobs, they realize that they need to know more about financial literacy. So there is an opportunity for us in financial literacy for adults and even for children to be included in their learning from their early days. This is one thing. Other payments like using advanced technologies, QR code, contactless, there is a big opportunity for it right now, and expansion on services that will come on top of the e-payments like lending, like international remittance, micro-insurance, all those services as their GSMA report has witnessed increase after the pandemic. So it is a green field now, and the challenge will be who can identify the opportunity and grab it. Thank you very much.
Thank you, Manal. Roselyne, please keep it under 1 minute.
All right. Thank you so much for this opportunity and for leading this discussion so well. Mine is a call to action, quite simply, and it's this, that for fintech to succeed as widely and deeply as it should across the continent, we cannot evade financial literacy and financial empowerment, because if people don't have income, they don't have options of awareness of what to do with that income, then fintech will not make sense, because fintech in itself is an enabler to this ecosystem of both financial literacy, financial empowerment. Let's broaden the conversation so that we can realize the amazing potential of what fintech has to offer. Thank you.
Thank you, Roselyne. Fionah, over to you.
Yeah, thank you. For me, I think it's the word partnership, because data is already there. The data is already with banks and telecoms. And what fintech is here to do is to leverage on that data, and they can provide specific services that would make the same customer of that same bank, of that same telecom to unleash their potential. And I call upon to not only talk about partnership and we leave it here, it's rather to now get into work and understand how would, if a fintech is providing an e-commerce or food delivery services, how would I work with the same fintech company to give other services to the same customer that is having a bank account with me. And with that, we can reach far. And at the same time, banks and telecoms would have an opportunity to reach to the marginalized or remote consumers, as well as now fintech are winning as well in the process. So thank you for having me today.
Thank you, Fionah. Simon, over to you. Your closing remarks.
Thanks, Ali. Thank you very much. Oh, well, thanks for a great session. Yeah, I mean, just to reiterate what everybody else is saying, really. I mean, it's really got to come down to thinking about what the problem is. If the problem is KYC, the technology thought about and deployed and used carefully can overcome that problem. Just to play back a couple of the survey results, 36% of those we polled in Kenya said that they thought agriculture was one of the biggest opportunities. Agriculture is not we're not talking about financial services, we're talking about market need. And I think that's really where it's got to come from. What is the problem that you need to solve? What is the objective of fintech in the first place, so that it benefits everybody in the ecosystem, and a rising tide lifts all boats. So I think that's really what it's got to come from. And financial literacy certainly plays a big part in that. I think that there has to be a way that the individual market participants play a role in ensuring that their customers know what they're doing and can know and use their services safely and in a responsible way.
Simon, thank you so much. Thank you all, Manal, Roselyne, Fionah, Simon, and Fad for the opportunity today. For me, the one thing that I want to just tell all fintechs and startups that are listening here today is that coming together is important. I am really, really happy that we have two representatives from country associations today of fintechs, Manal and myself. So to just re-emphasize this point, let's stop complaining. If you want a seat at the table, demand that seat at the table, because I can tell you for free that if you do not have a seat at the table, when people are having lunch or dinner or breakfast, you are either serving that lunch or dinner, or you are on the menu, and you don't want to be either one of the two. Fahad, over to you.
Thank you. Thank you very much, Ali. Thank you very much. It was indeed a wonderful closing panel, an amazing fintech panel. Ladies and gentlemen, with that, we come to an end to the 4th Africa Bank 4.0 Summit, East Africa edition. I'll be actually speaking out over here. I'll be sharing closing remarks. Abhinav is having health issues, so I'll be closing on his behalf. There are a couple of things that I did hear buzzwords and quite a lot of learnings in the last 48 hours indeed. I mean, I'd like to start with something that Chidi Okwala said yesterday from Asante Group during the CEO panel. And he did point out that, hey, you know what, banks, you guys don't need to be afraid of the telco operators. Like, look, I mean, like, if telco operators, them getting banking licenses, how are they going to eat your cheese? How are they going to move your cheese? He took a very good example of the postpaid connections. Like, if you see the penetration of postpaid connections is compared that with the prepaid, then you can imagine that what is the wallet size of the customers over there. So accordingly, banks, they can, and fintechs and digital banks, they can give credit accordingly to the mass segment based on their wallet size. Good insights on BNPL. So some fascinating insights based on payment services and enhancing of financial inclusion. Ali also said lots of interesting things, and his words quite recently right now that, you know what, banks and all of you companies out over there, we are the fintech country representatives of fintech association. Ali represents Kenya, Manal represents Sudan. There are many others also in the conference. So come to us. We are buddies. We're not enemies. We're buddies. We're here to work together. We're here to build an ecosystem. Gone are the days where there have been events and conferences and themes based on bank, fintech, war zones and all collaboration. Now it's all collaboration. There's no such thing as competition. It's all collaboration because you're here to do something best for the society. Financial services, it is definitely an emotion. There's a lot of emotions attached to it. It's the good for societal development. Abhinav Nehra, he did mention this yesterday, and he mentioned this today in the digital lending discussion that we had with Ivan and Kevin Mutiso of the Digital Lenders Association of Kenya. That, you know what, when you deal with the customers, you have to put your customers around your arm, like that. You put your customers around your arm, and you need to be that close and that connected with your customer. So that's how you need to think for the customer. So obviously the customer is the king, and KYC means know your customer, not kill your customer. So with that, ladies and gentlemen, I would like to also do a bit of branding over here. Our next stop is on August 25 and 26. We will be doing the 5th edition of the Africa Bank 4.0 Summit. This is the 5th Africa Bank 4.0 Summit, exclusive to the West Africa region. So do register for that. It's on August 25 and 26, exclusive to the West Africa region. And after that, we will be in North Africa for the 6th Africa Bank 4.0 Summit, North Africa, on October 26 and 27. Do visit the Africa Bank 4.0 Summit's website. Do engage with our team here on the platform, and do register for the upcoming 2 events. The recordings for both the days, it will be shared with the delegates who had attended the conference, and that includes copies of the presentations from yesterday as well as today. They will be shared with the attendees and with the speakers, of course. Ladies and gentlemen, from my side, from DI World, from Fahad Ali Akmal, the show director of the Africa Bank 4.0 Summit series, good night, take care, and look after yourself. Stay safe. Until next time, goodbye.
Thank you.
Bye.
Thanks, Fahad. Thanks, guys. Thanks, Ali. Bye-bye. Take care.
Goodbye.